morning, ladies and gentlemen. My name is Suthiyat Hongtong, Society Manager of CFA Society Thailand. I would like to welcome all of you to CFA Institute Research Challenge in Thailand, the year of 2019 and 2020. The Research Challenge is a global equity research competition among teams of students organized by CFA Institute. There are more than 1,000 universities joining us around the world every year. For the local level this year, we arranged a competition with WHA Corporation Public Company Limited as a subject company. At the end of today, we will be selecting the best team that will represent Thailand to compete with other teams around the world. On behalf of CFA Society Thailand, we would not be able to make this event happen without our generous main sponsors, including Pattara Security Public Company Limited, the Stock Exchange of Thailand, Bloomberg, and Kaplan Schweitzer for their kind support. Before we begin our final round, please join me in welcoming an advisory committee, a former president of CFA Society Thailand, co-founder of CoffeeWorks, CEO of A Stotts Investment Research, to give us an opening speech. Please welcome Dr. Andrew Stotts.
You guys ready? So it's my honor to open this event on behalf of our current president, Kun Win Pongpet, and he has asked me to share some message with you about the research challenge and what you're doing. So first of all, on behalf of Kun Win and CFA Society Thailand board members and CFA Society Thailand members, I would like to welcome all of you in this room. It's fantastic to see such a big turnout. Can the people in the back row raise your hand and say hi? Yeah, okay. We have got a great number of people here to watch what is going to be a very exciting series of presentations. Before we get started, I would like to highlight that the CFA Institute started the Research Challenge about 13 years ago with the idea of reaching out to university students to introduce them to the world of CFA. In Thailand, we have been doing this now for 11 years. We started our society even longer than that in Thailand, and I've been involved with the CFA Society since that time. It has been a fantastic journey to reach out to all of the students in Thailand to try to encourage all of them to participate. If you went back 10 years ago, we had a small number of students, a small number of teams. But if you recall the kickoff meeting that we had a few months ago, you guys remember that when we started? There was a lot of teams that were in that room. And that is a real testament to the work that Kun Not has done with the CFA Research Challenge, together with Kun Mind and others who have volunteered over the years to continue to expand the Research Challenge. And why is the Research Challenge important? I believe for one reason, and that is ethics. Now you may wonder, how could the Research Challenge be about ethics? What do I mean by that? Well, over the years, what I have learned is that the uniqueness, the ultimate uniqueness of CFA Institute and the CFA Charter is that we have been trained to a high level, or maybe even the highest level of ethical standards. And therefore, organizations like the Stock Exchange of Thailand and the SEC, not only in Thailand, but in countries across the world, partner with us in activities such as this. Why is that? Because they want to raise the ethical standard of behavior in the stock market. So you may see the Research Challenge as a chance to apply your skills as an analyst, to apply your skills in forecasting, to apply your skills in valuation. But truthfully, this is a chance for you to get exposure to the great men and women who are members of CFA Society Thailand. And you get to see their ethics in action. One last thing I want to say about ethics is, if you think about it, many people have a master's degree, many people have a PhD in this world. In fact, how many people in jail around the world have a master's degree? Do you know? Could you guess? Tell me a guess. Maybe 1,000, maybe 100,000. How many people in jail around the world have a PhD? Maybe 1,000, maybe 10,000. How many people around the world who are in jail have a CFA charter after their name? How many? Make a guess. What do you think? Shout it out. The answer to this question is 0. Not because there are perfect people who have CFA charter after their name. The answer to this question is you will lose your charter if you break the law or violate ethical standards. And this is what makes the ethics of the CFA Society, the CFA Institute, and the CFA designation a powerful thing. So, I want you to always, when you think of CFA, to think about our differentiating factor. You can go onto YouTube today and become an expert in forecasting companies. There's millions of videos out there. But to become an expert and an honorable person in the area of ethics, you, as participants in this event, have now gotten exposure to the ethical people in the CFA Society Thailand. So, in closing up my presentation, I want to congratulate you for all the hard work that all teams have done. It just so happens that we have 4 teams today. But I know that every team put in their best effort to get to this point. And today, we're going to see only one team get to be the winner. Therefore, I would like to direct my final comments to all the losers in the room. Trust me, you will lose many more times than you win in life. In fact, some people know this, others don't. I failed level 2 when I took it my first time. I failed level 3 when I took it my first time. But I'm not a quitter, and I believe that you win or you learn, not win or lose. So, in my closing statements to all the losing teams, I want to congratulate you for all the hard work that you've done. And I want to commend you for taking this opportunity to advance yourself. And I hope that all of you consider to become CFA charter holders and members in proud standing of CFA Society Thailand, because in this small group of about 600 people in Thailand that have CFA after their names, they will welcome you because of your participation in this event. So, in closing, I want to congratulate all teams, both winners and learners. Continue your process of learning, and you will have a beautiful future ahead. Thank you very much.
Thank you, Dr. Andrew Stott, for your inspiring welcome speech. Next, we will go over the rules and introduce you to our judge. In the meantime, please turn off your phone. Make sure that you mute it so you don't distract our presenters today. Right now, please welcome Kun Papawi, our moderator. She will take it from here. Thank you. Good morning, judges, professors, CFA board members, volunteers, and our guests. I'm Papawi Shashubandit, the organizers of CFA Research Challenge in Thailand this year, and your moderator for today. This year, 14 teams from 9 universities participated in our program, but only 4 teams who got the highest score in the report and the presentation during the semi-final round advanced to the final round today. We are looking for not only a good writer, but also a team that has the ability to present their knowledge and answer to the challenging questions to represent us in the regional round. Similar to regional round, the final 4 teams will be presenting the analysis to our panel of judges who will give them the score. The team who get the highest presentation score will be the winner, representing CFA Society of Thailand in the regional round. Before we start, I would like to introduce our honorable judges who are highly respected financial professionals in Thailand. From my far right, Kun Orsen Kanbarisut, Head of Equities Thailand, Aberdeen Standard Asset Management. Dr. Andrew Stott, CEO of A-Stotts Investment Research and former President of CFA Society Thailand. Kun Pacharachai Puthikun Sathit, Investment Analyst NT Asset and the winner of the first CFA Research Challenge in Thailand. Kun Suwat Sinsadok, Senior Executive Vice President, Financier Cyrus Securities. They are all volunteering their valuable time to our program today. Thank you very much. Now let's go over the rules for the presentation. Each team will have 10 minutes for the presentation and another 10 minutes for the Q&A. When there is 5 and 1 minute left, the team will see the sign like this, and another side when the time is up. Same rules apply to the Q&A session as well. We will call each team by its assigned number, not the university's name, to ensure the unbiased judgment. So we ask all the audiences not to review any sign indicating the university's name while the team is presenting. Also, in order to avoid any distraction to the presenter and the judges, we would like to ask your cooperation to please be quiet during the presentation and keep the walking in and out of this room to the minimum. เพื่อไม่เป็นการรบกวนผู้เข้าแข่งขันนะคะขอความกรุณางดใช้เสียงและอย่าเดินเข้าออกระหว่างการพรีเซนต์นะคะ So now we will start with team A. So team B, C, and D, please follow our staff to the waiting room in order to wait for your turn. So team A, you can start whenever you're ready. The time will start after your first word.
In the current market condition, with the coronavirus outbreak and the economy faltering, all may seem doom and gloom with our country. Yet, there will always be opportunity for investment. Good morning, everyone. We are Team A, and we are recommending a buy on WHA. Despite the market risks, we believe that with its strong fundamentals, future growth potential, and attractive valuation, we can reaffirm our buy recommendation at a target price of 4.3 baht, with a 25% upside based on yesterday's price. Let's first look at the fundamentals. WHA is a leader in industrial service, providing a range of services from warehouses to water and power. With its fully integrated business model, WHA possesses a diversified portfolio that is able to serve every customer need. WHA is a market leader with 38% market share based on land sales in the last 10 years. It has the most number of estates out of all its competitors, providing it great flexibility and clustering advantages. And on a more recent note, last year, WHA sold about 1,000 right of land, which is much higher than its two closest competitors, Amata and Rojana. This highlights the company's continued strength in acquiring new customers. The company serves customers from a variety of sectors, from consumer goods to its key customer segment in automotives, with partners such as Nissan and SAIC. This not only allows the company to diversify away sectoral risk, but also supports its long-term plan to shift to newer target S-curve industries. And at the heart of its operation is the company's use of trust funds, which rank among the top in the country. Last year, WHA sold over 4.5 billion baht worth of assets to its trust funds, which gives it great financial flexibility and additional income for investment. These two factors create a continuous engine for growth. And lastly, a question that a lot of investors may have is, what about recurring revenue? In the year 2020, our team forecast that the company's recurring revenue will stay in line as in previous years at a ratio of about 58 to 42%. This means that even if WHA does not achieve its land sales targets, it still has its existing long-term contracts to fall back on.
So not only do we see the upsides in the company's core fundamentals, but also the growth potentials that the business can unleash. The most impactful growth stimulator is the company's strategic clustering in the EEC, with electronics in Philippines, petrochemical in Madaput, automotive, and the potential customized clustering in Rayong. Despite the delay, the EEC is coming via the recently approved projects, the high-speed railway, and the Madaput Industrial Port Phase 3. Such government-backed infrastructure are to promote Thailand as the industrial hub in the ASEAN region. WHA reaps tremendous benefits and advantages as 95% of its locations are within close proximity to this infrastructure. Not only that, but the company's variety of locations and flexibilities gives it the upper hand compared with competitors. We also believe there's growth momentum in terms of foreign direct investment. With the growing numbers of Chinese firms relocation and the growing numbers of client base in the targeted industries, these numbers illustrate the upward trend despite the trade tensions. One of you may ask, what about trend reversal when it comes to the trade war? Because that has been partial rollback. However, geopolitical tension remains, which serves as stimulus for the continuous inflow of the Chinese foreign direct investment. WHA also continues to expand via the internationalization into the Vietnam market, penetrating both the industrial market with the Ngang An project and also the water market with the project Duong River. There is significant growth opportunities in terms of Vietnam industrial sector, as it is the primary growth driver of the country's GDP, up to 87%. At the same time, Project Duong River also complements the need for water consumption, not just for industrial, but municipal usage, exhibiting strategic diversification. Furthermore, another growth booster is that WHA ride on the alternative energy trend, supported by feed-in tariffs incentive in Thailand. With the current area at WHA's capacity, the company can capitalize on the growing demand for solar energy at 9.14% via an expansion into WHA and non-WHA customers' roof. At the same time, this is a strategic movement towards sustainable growth, which will also generate additional recurring income for WHA. All the previously growth potentials fosters the company's growth potential as a whole, thanks to its integrated ecosystem. These growth potentials are catalysts for the rise in price and land sales for industrial estates, the rise in rental price with stable contract acquisition rate for logistics, the high demand and price growth for water, and the increased investment in the solar power generation and new plants. All of these are incorporated into our assumption for the evaluation.
So let's look into the valuation. Aside from the key growth driver, factors that are key to our valuation include new accounting regulation that negatively affect to income from power segment, a higher water demand from new power plants, and the Hanoi government put pressure on lower water price. For the WHA, we use sum of the part method. Owing to the fact that each sector have different business model, we apply discount cash flow to value NOA from the embedded income, rental property, water, and power, while EBITDA multiple was used to value for the industrial asset part. Terminal growth rate was assumed 2% based on long-term growth rate of Thailand GDP, and beta was derived from the relation between each sector and set 50 for 5-year periods, of which result in the different value of WACC when evaluating each business unit. This is the enterprise value contributed to the company. Industrial asset is the highest contributor.
Using sum of the part valuation, we come to a conclusion that the target price for the WHA is 4.3 baht per share, which means a 25.1% upside from the current price. And we can see that the current PE ratio is well below the 5-year average, and it's also lower than its peer, whereas the company fundamentals have not changed. This confirms that the WHA is traded at a discount. And yet, as with any investment, there will always be risk, and we will highlight some of the important ones here. The first one is the uncertainty on large infrastructure projects, especially in the EEC area. The second risk is the economic volatility resulting from geopolitics and epidemics. And lastly, the possible regulation conflict with the Vietnamese government. In any case, the WHA has ability to mitigate all the risks as the company is trying to diversify their portfolio, expanding to new market and having a strong political connection. This would alleviate such a negative impact to have less consequences and lower the chance of the same case to happen.
Apart from the long-term investment risks, recent events that could have or have an impact on the WHA are the failure to secure a Alibaba contract, the possible effect from exercising warrants, the coronavirus outbreak, and the possibility of being removed from Set 50 index. These events could have a negative impact on the WHA target price. However, we still expect some upside from the current market price. Then we increase our confidence in our recommendation by doing a simulation of Monte Carlo, which gives us 90% favorable result in investing in the WHA. With the 3 main catalysts, strong fundamental, growth potential, and attractive valuation, we believe that WHA embodies the future of Southeast Asia industry. Therefore, we reaffirm a buy recommendation at a price of 4.3 baht per share. Thank you. And if the judges have any questions, we'd like to take them now.
Does an awful job in the presentations. I'll go first. So I guess this is one of the most popular questions. So it's quite obvious in Thailand that there's 2 choices as an investment proxy to play this theme, which is the WHA and Amata Group. So can you explain to me what is the why do you prefer WHA over Amata?
Okay, so we think that both Amata and WHA are good investment. Their valuation both show an upside if you buy it at the current price. But we believe that there are two key differences between Amata and WHA. The first is that WHA is, in terms of revenue, it's a lot bigger than Amata, so it has more financial muscle in that regards. And the second thing is the outlook of the company CEOs are quite different. If you look at Amata, we believe that Kun Wikrom is more focused on geographical expansion. So both companies are looking at expanding outside of Thailand because our neighboring countries' growth is more attractive. But in terms of WHA, we believe that Kun Jariporn also is looking at shifting to new manufacturing sectors as well. So both stocks are good buys, but if you want to focus on geographical expansion, we say Amata. But if you want to bet on the new shift in terms of manufacturing, then we say WHA.
Great presentation. The question I have is, you guys have looked at this for a long time. You know what's out there in the market. Can you give us some idea about what is new in the way that you look at it? You know, what is something that the market's not seeing that you're seeing in your analysis?
Okay, so in terms of the WHA, as my colleagues has stated that WHA is looking in terms of the S-curves industries, the new shifts in terms of manufacturing industries. So that is the CEO vision, and we believe that we see that the company has growth potential in terms of targeting these S-curves industries because just last year, about 63% of the investment within the EEC comes from the targeted industries. So I think this is like the main growth potentials that the companies can capitalize on.
You mentioned 1,000 RAI forecast. What makes you confident of this figure?
Because in the event that the Thai country faced the risk, the political risk in 2014, which is a coup, they still acquire a land, sell land, acquire about 600 land. So this means that this current economic situation is not that bad, and we believe that the USA has ability to acquire the same performance as previous years.
I think I have a bigger questions about how the company, let's say, balance the return to the investor, that because it seems that for me, you have three main business. One is a power, which actually you have not touched upon at all in your presentation. Second is a water, where you see the growth potential. And then the third one is industrial estate. You see that half is industrial estate, which is very, I would say, volatile and high risk, while on the utility side is more sustainable. You have not, let's say, how you balance this kind of the risk and reward in your portfolio in terms of a Thailand opportunity and Vietnam opportunity. Can you mention that?
Sorry, can we ask you to clarify the question a little more?
How can you balance your strategic growth in Thailand and Vietnam, given the fact that you have three main business: power, water, and industrial estate, and based on that risk-reward characteristic?
You mean as if we were WHA or as an investor in the stock?
If you are, let's say, the seller to be,
Yes.
so you decide, you sit on the, let's say, management view, how you address this kind of the reward. And investor, I'm not quite sure how you can sustain your land sale. I'm not quite sure how can you enter the new market with confidence.
Okay. So actually, the water and power is actually closely tied to the industrial estate. So as you say, the industrial estate is quite volatile. Every year you have to secure new customers. So in terms of WHA, the way that they can increase their recurring revenue is to basically either sell new products or increase production of the water and power to existing customers. So in terms of new products, they have the demineralized water, which is, I don't think any other industrial estate has this yet. And also they have the solar rooftop in order to generate power for the existing customers. And one key thing is in Vietnam, they're also selling tap water. So they're expanding outside of industrial estates as well and selling to basically everyone.
Related to that questions, so on your valuation of 4.3 bars, right? Can you break it down between recurring and non-recurring?
For non-recurring, we base component from the only land sale and asset monetization. We categorize this segment to non-recurring and other is recurring.
Yeah, my question is simpler than that. In this 4.3 bar, how much of this come from the non-recurring and how much of this come from the recurring? You understand my questions, right? Let's say 2.5 baht come from non-recurring, 2 baht come from recurring.
Just add the participation is 58% from approximately 60% is come from the non-recurring and 40% is from recurring from our valuation.
Question on valuations, follow up. What happens to your valuations if the debenture market is closed, the REIT market is closed, and the property fund market is closed?
You mean the target price, right?
Your valuations.
You mean the target price that we will define to if the fund.
The impact to your valuations and target price.
Yeah, it's mostly defined to just about approximately 2 to 3 per share.
And to continue on in that, just thinking about interest rates are really low right now, and it's possible that they could rise in the future substantially. Nobody's really expecting that, but there's a possibility, just like they fell much more than what people expected. And the valuation of this company is really driven by a very low discount rate. I'm just curious if you've done any simulations, like what would happen if interest rates went up by 1 or 2%? How would that impact the value of the company?
So our valuation was based on the previous interest rate before they brought it down. So in the case that if we base it on the current interest rate, if they don't issue any new debt, then we expect the valuation to be roughly about the same. But of course, there's news that they will issue about 7.5 billion worth of new debt.
What I'm talking about is, let's say, right now your forecasts are going out for many years in the future at a pretty low discount rate and a pretty low interest rate. My question is just, if in the next year or two interest rates start to really rise, have you thought about how that would impact the valuation?
Yes, if you affect our valuation, the company has more interest expense too. So it's lower the net income, and our target price will lower than 4.3 billion.
And perhaps if I could add to that, of course, if interest were to rise, then bond yields would become more attractive, and people might be more interested in pulling investment from the stocks and into bonds.
Okay, let's say, what is your thought about the major let's say, the biggest risk in your valuation out of everything that you just asked?
So welcome Team B. You have 10 minutes for the presentation and another 10 minutes for the Q&A. You can start the presentation whenever you're ready. The time will start from your first word.
Under economic uncertainty, investing in stock market can be very risky. Investors are now striving to find the right investment decision to enhance their portfolio. A stock that can provide them a bright future growth, a strong business structure, and a progressive strategy. And today, we believe that the BHA is that right decision. Good morning, ladies and gentlemen. We are Team B, and we recommend a buy on the BHA stock with a target price of 4.49 baht, offering an upside potential of 31%.
The BHA is the leading industrial properties developer established in 2003 with the initial concept of build-to-suit projects. After acquiring Himara in 2015, the company is able to broaden its product line to a greater extent. Currently, its business structure was comprised of 4 main hubs, 2 core, industrial development and logistics, and 2 complements, which are utilities and power service and digital service. This business cluster has helped the BHA to generate revenue from various channels, revenue from real estate, mainly from monetization and industrial estate, revenue from lease and service, from logistic properties, revenue from sales from utility service, and share of profit from power service. Our buy recommendation was driven by 3 key reasons: its strong competitive position, favorable market trend, and sustainable growth strategy. First, let's look into its strong competitive position. From the bidding process to select the best contractors to the BHA total services, the company benefits from its strong value chain, firmly moving forward with only limited number of competitors. As the BHA operation was mostly within Thailand, it also gained advantage from Thailand's strategic location, situated at the heart of Asia, surrounded by fast-growing emerging market. This is leveraged with its existing property space, which span throughout EEZ area and around the center of Thailand, which is supported by strong infrastructure and government investment incentives. all key strengths push WHA to be the best among other players in industries, having the second largest logistic properties area with the faster asset growth rate than the market leader, at the same time owning the highest shares of land sales up to roughly 50% in industrial estate market.
For the second reason why we recommend you to buy WHA is the fair market trend from EC project and e-commerce trend that will drive WHA revenue. Eastern Connect Corridor is one of the key strategic projects under Thailand 4.0 policy. It aims to increase the country competitiveness to the infrastructure mega project and attractive benefit investment benefit within three provinces, Chonburi, Rayong, and Chaeng Sao, which are considered both ASEAN and Asia strategic locations for trade and investment connectivity. We believe that the outcome of EC will bring large opportunity to WHA. The most of WHA industrial estates are located in EC, cover 6 out of 10 promoted industrial, and also 715,400 square meters of logistic property, include warehouse and logistic park, are located in EC too. In the past 5 years, WHA land sales are moved relatively with FDI inflow into manufacturing sector that affected by EC incentive. From our analysis, we assume that land sales will grow 5.25% along with FDI inflow into manufacturing sector, and 81% of land sales each year will be land transfer. To convert land transfer into revenue from sale of industrial estate, we assume one right of land transfer will be 3.49 million baht. To catch all investment that will come to Thailand, WHA have planned to open one industrial estate every year. It's not only increasing revenue from sale of industrial estate, but also increase from sale and service of utility that the company provides to the consumer in industrial estate too. From the company plan that I mentioned, revenue from sale of utility will grow 4.6%, and revenue from service of utility will grow 4.26%, along with WHA industrial estate area.
Next, we believe that e-commerce segment will be the main growth driver of logistics business. Current market value in Thailand is about 3,000 billion baht and expected to grow 50 to 20% yearly for the next 5 years. This growth is supported by the position of the biggest B2C market in ASEAN and internet penetration rate and the shares to total retail market that is relatively small when comparing to developed Asian countries like China. WHA has shown its dedication and ability to capture the trend through these 3 projects, especially the first e-commerce part of Thailand that made solely for Alibaba. The project's special feature, which is the 40 days tax exemption period, will allow goods to be returned without being taxed, will be highly beneficial to e-commerce business. So we are confident that the project will come back again in year around 2022 or 23, which will drive the e-commerce to take up to 20% of the total portfolio. Lastly, is the sustainable growth strategy. Growing real estate business needs a lot of capital and time to realize earning. However, the company has a policy to grow their business in a healthy way. First, they have planned to sell their asset into their REIT yearly, and we expect that around to be 160,000 square meters per year, which according to the company plan and the forecast of the capability of the area that is well occupied and ready to be sold. This activity will allow the business to grow with low need of borrowing, plus lower the risk that the company take, which we can see from IBD to E ratio that will reach 0.8 in year 2023. Lastly, the joint ventures in power plant can help boost the net profit. Currently, there is GETCO 1 and IPP plant that contribute 44% of total equity megawatt. And as 90% of the customer is EGAT, we forecast the electricity demand from EGAT come up with the energy dispatch period, which result in 3.2% growth in shares of profit from joint ventures.
Regarding the valuation, we value the foundation and the growth by each different business. The first one is logistics, which we arrive at the price of 2.11 baht per share. Next, for industrial estates, we value by NAV method and came up with a price of 0.94 baht per share. Lastly, we targeted 0.85 and 0.58 baht per share from power and utility business, which both prices are derived from DCF model. After combining all the business together, we issue a buy recommendation with a target price of 4.49 baht per share, offering 31% upside. Also, this target price already incorporates the dilutional effect, which in case of the company's warrant are fully exercised. Except for the industrial estates, we also use different WACC for each different business. Our cost of equity was derived from CAPM model, where our equity betas were calculated by using the mean of allowed peers of each business. Moreover, we believe that 2.5% of terminal growth is expected to be the appropriate number for all businesses except for the power one, which is believed to be only 0.25%. In terms of relative multiples, our implied price to earning is considered to be higher than its 3-year historical average. However, we believe that it is still in between the mean of business price to earning. So we believe that the high company's price to earning reflects more of the company's growth potential.
For the investment risk, this month we have seen a number of events happen. We are very mindful to all of them, and we have readjusted our investment risk according to the matters. So the events are the Thai baht appreciation, the coronavirus outbreak, and the delay in EEC infrastructure, which result from the budget bill approval issues. However, we set the impact and the probability of them to only be moderate level, as we believe that the impact of them will be temporary and they will not reoccur in the near future. But if there are the cases, we also run scenario analysis to confirm that even the worst case of each event, the target price of each one still has an upside over than 10%. So this can ensure you that there will be no downside whether the event happen or not. So in summary, we have mentioned 3 positive prospects which indicate that the market is now underestimating the stock value, which are the strong competitive position, the favorable market trend, and a sustainable growth strategy. So with 31% upside and the target price of 4.49 baht, we are very confident with our buy recommendation, and we would like to invite you to invest in the WHA stock as the right investment decision. Thank you for your attention. The floor is now open for Q&A session.
Right, first of all, good job with the presentations. So, I see you do the breakdown on the valuation with the sum of the parts on the business segment. Can you split it in the way that by geography? Because the WHA has a plan to expand into Vietnam as well. So, what's your assumption on this? What's the valuation that come from business in Thailand, and what's the valuation that come from business in Vietnam?
Thank you for the question. Let me answer these questions. So basically, all of the business of the WHA considered to be in Thailand, except for the industrial estate, which is clearly developing in Vietnam right now. So the assumption of the growth of industrial estates in Vietnam will include it in the industrial estate price.
But they do have investment in the water supply company in Vietnam.
Yeah, that's a joint venture. I think it's called Duong something, right? Yeah.
It's their water supply. It's not their something.
Yeah. Basically, we view it and saw it as they just like in the first stage of the investment.
Okay, so we have done an analysis on Duong water supply, and we saw it, yes, like my colleague said, it's only the first stage of the investment, and we have done a forecast on the revenue and the profit, and it's relatively small. So we don't believe that the Duong water will contribute much of the joint venture of this company.
In terms of your evaluations, how do you incorporate climate risk into the models? And what happens if there's a drought? How would that impact your evaluations?
Sorry, could you elaborate your question?
Okay, if there's a drought, what happens to your evaluations?
Sorry, what kind of drop?
Drought. No rain.
Okay, so the investment risk that we have mentioned, that there are the risk that below the risk that we have mentioned, so that, but we didn't put it in the slide that we said the disaster to be around low impact, because we believe that the WHA have a plan to protect that.
And as to my colleague, the utility business that the company have provided the water into the customer in an industrial estate. So the company have a plan and protect about this problem. So they found the supplier on the water to provide the enough in customer in industrial estate areas. And also, if you look in the revenue of the utility, that we have the high profit margin from the assets, utility and water from in WHA business.
I'm trying to understand how much of the valuation is based upon the EEC happening. So, sometimes government initiatives and all that sound good and they appear like they're happening, but then they don't happen the way that it's planned. So I would like you just to think for a moment that it doesn't happen the way it's planned, and it's slower and it's less impactful. How does that impact the value that you've come up with?
Okay, so we have considered about that event. Particularly is the delay in infrastructure, is the effect from the budget bill delay approval, and we have done a scenario analysis.
So to add up to my colleague, the delay in EEC projects, we didn't think that it will potentially impact our valuation that much, because of this delay was the EEC project was the project that was cooperate with private sectors a lot.
So after we put it in our model, so the result, next page please. So the result is that the target price will remain site.
And add on to my colleague, we use the FDI inflow as the proxy of the evidence of the potential of EC, and maybe in the past couple of years the FDI inflow is not that dramatically increased.
So are you saying that the impact is zero? Or very tiny? Or?
Yes, very tiny.
Okay.
For the breakdown of valuation, could you elaborate more on how you come up with the biggest valuation of the logistics against other that you elaborate?
So basically, our logistics part consists of main two parts. Which the first one is the leasable factory or warehouse. Another one is the price from the lead, which the company is on.
To add on to that question, what I would like to know is how much is that logistics value due to future hope that it brings value to the company versus what it's bringing now. In other words, if we were to look at the structure of the company now over the last couple of years, how much is logistics now versus what you're expecting in the future, so that we can understand how much of this is built upon, the hope that it comes in.
Okay, so the main driver that may drive the logistics to get more proportion of the total value is the e-commerce business, and the company has a dedication on that segment, and also the company has a plan to sell the asset into the risk yearly. So we believe that these two main factors will be a main hope that can drive the logistics to go further in the future, and we believe that it will gain more and more proportion in the total value of the company.
I guess my question is just, is this company a logistics-based company now? Or is it going to be more of a logistics-based company in the future?
We believe that in this current state, it just acquired Hemorrhage for like 2 or 3 years. So we believe that now it is more logistic company than the industrial business. And but in the future, we believe that, as my colleague say in the next slide, that the industrial estate has planned to open the new area each year. So we think that when the time goes by, we think that there will be more mix between industrial estate and logistics business.
Put it another way, we have a slide on how the revenue mix has changed over the years. What is the revenue mix going to be, in your view, in 3 years?
Okay. Do you have one?
Okay. So the revenue mix in 2 or 3 years. If you look at now, and especially in 2017, the main portion of revenue is the sale of assets into the REIT. But the heavily sale in 2017 is come from the one to repay the debt that acquired Hemorrhage. But we believe that in the near future, this item will be lower, that they don't need that much capital, they don't need as much money as in 2017. So the portion of the lease and the portion of the industrial estate will go up, and the portion of the sales to the risk will go down. But however, the total revenue will still go up, as we forecast that we believe that the logistic e-commerce will drive this business.
What is your assumptions on for the capex over the next 5 years?
Okay, so each sale of the business will reach its peak in 2023. So the year between now and that year will be the investment period. So the capex to sell between 2020 to 22 will higher and higher. But when it reaches 2023, the capex to sell will be lower, as the company has already occupied it.
Thank you, Team B. So we now have a 10-minute break, and we'll be back at 10. So welcome Team C. You have 10 minutes for the presentation and another 10 minutes for the Q&A. You can start your presentation whenever you're ready. The time will start from your first word.
Despite economic and financial uncertainties, WHA remains robust with a strong fundamental at a favorable price. Good morning, ladies and gentlemen. Today, we place a buy recommendation on WHA stock with a target price of 4.5 baht at 31% upside potential. WHA is one of the leading industrial estate developers in Thailand. There are 4 business units, which are: first, industrial estate, where the company sells industrial land; second, logistics, in which there are factories and warehouses; third, utilities and power, that are power and water provided to industrial estate customers; and lastly, digital platform, aiming to support all activities of the company. Currently, WHA's revenue are well diversified in terms of both revenue breakdown and revenue proportion, and this helps stabilize performance of the company. Moreover, WHA is the top industrial estate player compared to its peers. With a vertically integrated supply chain and a build-to-suit expertise, WHA can capture many well-known customers across the industries, indicating a leadership position. Ladies and gentlemen, these are 3 main reasons why WHA deserves buy recommendation. WHA, winning growth story, high financial flexibility, and attractive affirmative valuation.
Moving on to the first reason, WHA has a winning growth story. There are 2 major trends that are able to enhance WHA future growth. Firstly, Eastern Economic Corridor, or EEC, which can positively impact the industrial estate business. Secondly, the expansion of e-commerce, which will fuel the growth of logistics segment. Let's see how WHA can ride on this global manufacturing wave. With higher cost of manufacturing and additional catalyst from trade war, this has sped up the movement of global manufacturing to emerging markets. As Thai government initiated EEC project with attractive tax incentive and mega infrastructure project, this resulted in 30% CAGR in foreign direct investment. With the highest number of land available in EEC and dominant position with the highest market share at 50%, this ensuring that WHA will get the most benefit from EEC project. Next, the market value of e-commerce is forecasted to grow at 9% CAGR in Thailand. An expansion of e-commerce will substantially increase the logistic activity. As a leader in build-to-suit concept with advanced technology, WHA is able to capture most of e-commerce giants compared to its peers. The company can capture several high-value projects, indicating that WHA is leading logistic provider for e-commerce sector. With rising opportunities, the question remains: how could WHA finance its winning growth story?
And here is the answer. WHA has high financial flexibility to first, cash from asset monetization, and second, debt financing. Firstly, let's discuss about asset monetization. For the last 5 years, asset monetization to WHART is highly significant to WHA Group, roughly over 31% of the total revenue. And management team also target to sell its assets at 150,000 square meters every year. So the question for investor may be, Is it achievable? How long can the WHA monetize assets to reach? To answer these questions, we see that the WHA has ample asset bank at 700,000 square meters, and 70% of them are built-to-suit warehouse and factory, which mostly be occupied due to high switching costs and long contract life. While the asset under the WHART has performed well over time at 90% occupancy rate on average. With this reason, we believe that the WHA can monetize assets to the WHART in short to medium term. Moving to the debt financing, we see that the WHA has the largest available debt room at 45 billion baht, with an excellent credit rating of A- from TRIS. This indicates strong ability for debt financing. We have seen that the WHA is a good stock. But the question is it the right time to buy it today?
Next, we arrive at attractive affirmative valuations. We derive a one-year target price of 4.5 baht per share. Since different businesses possess different financial and operating profiles, we utilize sum of the part valuations to truly reflect the value of each business. So, let's begin with industrial estate business contributing 0.6 baht to target price. As land sales are literally volatile by nature, we employ PE multiple to best reflect non-recurring income from land sales. For the peers, we identify based on strategic focus on land sales, covering the Southeast Asian market and low numerical discrepancies on accounting basis. For logistic business, it contributes 1.7 baht to target price, as main revenue contributions come from asset monetizations, accounting for 80% of total revenue from logistic business. Therefore, we utilize PE multiple to best reflect ongoing asset monetization in short to medium terms. We value utility business by two-stage, 5-year discounted cash flow valuations, contributing 0.6 baht to target price. We come to power business, which deliver 1.1 baht. We utilize dividend discounted models to best reflect recurring equity income from joint venture power projects. Finally, our football fee analysis confirms our buy recommendations at the target price 4.5 baht per share, reinforced by market multiple and DCF approach. Concerning relative valuations, WHA is fairly priced compared to its peers with the highest ROE over the industry. Moreover, WHA is now underpriced compared to its historical average price to earning ratio. Altogether, reaffirms this is the right time to buy WHA.
Due to high economic uncertainties, let's see if there is any downside potential. We identified key risks based on the likelihood and also the impact of the risk. The two most important risk factors are lower than expected land transfers and asset monetization. To address them, we identified risk drivers and mitigating factors. For land transfer, the potential delay in EUC projects, strengthening of the Thai baht, and global economic slowdown may cause lower than expected land transfer. WHA can mitigate by leveraging on its strong relationship with customers. Even in the worst case scenario, where there is no land transfers at all, our model still suggests a hold recommendation. For asset monetization, there may be insufficient amount of assets or low quality assets. WHA can find new customers or place them into existing assets. Again, even in the worst case scenario, where there is no asset monetization at all, our model still suggests a hold recommendation. Finally, our sensitivity analysis on both asset monetization and land transfer mostly yields a buy recommendation on WHA, indicating that there is a limited amount of downside risk.
By having a winning growth story, high financial flexibility, and attractive affirmative valuation, now it's time to grab the right opportunity at the right time and grow with WHA. Thank you.
I'm gonna go first. So on your slide regarding the competitive landscape, so it's pretty obvious to us that there are two leading players in Thailand, WHA and Amata. So can you compare the two and let us know one aspect of the business that you like and dislike, and why do you prefer WHA obviously?
So for both companies, WHA and Mata, both companies have full services as a one-stop service. And however, the differences are that for WHA, the company is trying to focus more on all of its business units to capture the upcoming trend. For example, e-commerce. As right now, WHA can capture e-commerce giant, while for Amata, it's focusing more on the township. For example, it provides hospital and school to people in the industrial estate. And moreover, WHA also developed build-to-suit concept in which Amata focus more on ready-built concept. And this is also reflected in high ROE of WHA.
The question that you ask is it achievable? The question that I ask that's, I think, more significant is it known? In other words, what, out of all the different things that you've presented, the market knows so much of this. The question is, from the research that you've done, what is something that you see that the market doesn't see?
Firstly, we see that we deeply analyze in both demand and supply of the asset monetization, and we see that WHA can monetize asset to WHART in short to medium term, backed by three numbers. First is the asset bank of WHA, that 70% are built to suit, and which this 70% is mostly be occupied due to its higher switching costs and longer contract life. Second number is the occupancy rate of asset under WHART that relatively high, reflected by the price pool and AOV that.
Sorry, just to ask about that. It's good presentation, but my question is, does the market know that, or what about that you see that the market doesn't know, that makes you positive?
So in our view, we analyze this asset in terms of the quality better than the market, and we are more certain in our model that they will be able to achieve the targeted amount of asset monetization within the short to medium term. So that is what our paper is different compared to the market.
Hey, since you're very confident on your model, this is a question for that. So obviously this is an EEC play, right? No matter how you spin it, this is an EEC play, right? Majority of valuation come from that. So do you have an analysis on the probability of success for EEC, and how do you incorporate that into your valuation and target price?
Okay, so our group believes that EEC will be successful in the future due to three reasons. Firstly, EEC is a key driver that can now leverage our country to be competitive in the region. Secondly, we saw a big progress as 2 of 5 mega projects have already been signed, and the rest of the is expected to be signed within the second quarter of this year. And thirdly, many private giant sectors such as PTT and General Group have already decided to invest with the government, increasing confidence that EEC will be successful in the future.
But what if it's not? What would be the impact? Let's say it's probably not going to be a total flop, but it's probably going to be faced with additional delays. And do you have an analysis whether this project has been get delayed 2 years further down the road, 3 years further down the road? What would be the impact to your valuation?
So the impact to valuation, in our view, will result into a lower than expected amount of land transfer. So in our growth and our model is actually implied within the PE multiple. So here we can see that even when we go down one standard deviation of our base case, it still yields about 4.06 baht. So the last time we actually had for WHA has like 90 hectares of land transfer. It was since 2003, and so even though it might be delayed, the project might be delayed for 2 or 3 years, we still see strong fundamentals from other businesses as well.
Okay, so could you elaborate more? What would be the, let's say, significance of the 2E in your model? One is an e-commerce success possibility. One is an EEC that you mentioned in this slide. Basically, how you assess that to translate that to the success of the asset monetization.
So just to repeat the question, how does the two events truly impact our sensitivity analysis here, correct? Like what is the impact? So
yes.
For our base case, we assume the success of EEC and higher growth in the future in terms of land transfer, and it's implied within our base case number of land transfer. Also in terms of asset monetization, for e-commerce, the success of e-commerce, capturing e-commerce players will result into more amount of assets for WHA to monetize in the future. So it is implied also in our PE valuation of asset monetization in the logistics business.
You have a slide on FDI. What makes you confident that the level will continue to be strong?
So in our analysis, we see that Thailand is still competitive compared to other Southeast Asian countries, and due to 3 reasons. So firstly, the higher labor costs and land costs in China, and the trend to move to emerging markets. Secondly, the EEC project, which provides tax incentive to investors and infrastructures.
I like the slide where you break it down into the W part, H part, and A part, but I particularly like the H part. So let's talk about that. So so you assume that there will be an asset injection into the REIT fund in the future. May I ask, what is the assumption on the yield that you assume that these assets will be sold into the fund? Basically, I'm asking about the funding cost.
The funding cost of selling an asset to it REITs is about 9 to 10% based on the quality of the asset, whether it's freehold or leasehold, or the location as well. It also impact the rental rate, which has impact the IRR of the fund. Our weighted average cost of selling asset to REIT is about 9.3%.
When you talk about logistics, when I think about logistics, actually, I think about, let's take companies that are standard companies in Thailand that have logistics operations. I think when you're talking about logistics, can you explain to me what is different between the logistics you're talking about? Is it about e-commerce logistics, and how much is that dependent on Alibaba as an example, or others coming in?
So to elaborate more over logistics, we provide a warehouse and factory for the manufacturing companies. And now for the e-commerce or Alibaba, we provide a distribution center for them.
And what I'm trying to get at is what's different? 10 years ago we used to call those industrial estates. Now you're calling them kind of e-commerce or logistics. Is there something different? Is there some specialty that the company has, for instance, in software or something like that? Or is it just that it's been renamed as something else?
So the difference is in terms of the build-to-suit concept, where WHA is able to provide whatever the customers like specifically demand for their warehouses. So they will modify and make it to the specifics that the customers want.
10 years ago, that was a difference that they said. Is there any other difference?
They're also implementing newer technologies into these warehouses to make them more cost efficient for the end consumers. And that's why end consumers keep coming back to WHA.
To answer about the Alibaba news, we see that WHA.
So welcome Team B. You have 10 minutes for the presentation and another 10 minutes for the Q&A. You can start your presentation whenever you're ready. Your time will start from your first word.
In the time of uncertain economic condition, trade war, and technological disruption, there is one company that can stand strong against such threatening remarks. This is the WHA Corporation, the ultimate solution partner. Good morning, distinguished audience. WHA has its 4 integrated hubs that work together as one. Its industrial development business that offers a one-stop service industrial land with utilities, power, and digital solutions provided to the customers for their production processes, coupled with the logistics business that specializes in world-class built-to-suit warehouses and factories, while also getting additional source of income from monetizing and managing its REITs and a property fund. WHA has been outperforming said index for the past 5 years. Today, we issued a strong buy recommendation with the 1-year target price of 4.30 Thai baht per share, implying a 28.2% total stock return. So why buy, you might ask? We have our COMBO combo reasons to further your buying decisions.
Let's begin with C, crisis into industry growth. China has been promoting its economy and cooperation with Thailand to advance its One Belt, One Road initiative, as China is moving forward to green shift, phasing out polluting industry into digital economy. Plus, trade war spurred investors to relocate their productions to Southeast Asia, and Thailand is their first choice, as it is the best country to start a business for 2 consecutive years. Also, WHA offers the solution to diversify their portfolios into more stable, with well-adopted infrastructure and manpower. And why Thailand is the red main spot? First, it had the strategic location in the central sub-region. It can reduce time used exporting products to European countries. Second, it had the best infrastructure among countries surrounding China. Third, BOI has launched Thailand Plus package, offering appealing incentives. Lastly, it holds the 21st World Bank's Ease of Doing Business and the third in Southeast Asia. All of this drives the growth of industrial estate industry. Moreover, 5G transformation increased the stability of automation, the demand for data storage, and the value of e-commerce market, in which every 1 billion of the value create the demand of 4,000 square meters for warehouses, as well as the demand of water supply in Vietnam drives the growth of utilities industry. So, why does it have to be WHA?
This is because of its number one position in the industry. With the current leading market share of 43%, WHA is the largest among its main competitors in industrial estate business, namely Amata, Rojana, and Amanakon. And this is backed by its strong competitive advantages, which are 1. The company has larger land stocks comparing to its main competitors, and all are concentrated at strategic locations. 2. It's the first in Thailand to use clustering concept, which can boost the customer efficiency and profitability. 3. It's the number one in logistic properties business, supported by a large area under-managed and well-known tenants. And comparing to Fraser Property, the main competitor in this business, WHA is better and more specialized in build-to-suit properties. And all the reasons are possible. We can confirm that with our team's company visits. And what's next for WHA? The company also has strong strategy to support future growth. Firstly, it is riding technology wave, embraces on the use of disruptive technologies in all of its business hubs, and this is supported by the largest CapEx spendings among peers. In addition, the company highly emphasizes on strategic partnerships with global and regional players, as well as moving toward digital transformation with two world-leading technology companies, Bosch and Ground. And the further growth strategy is through Vietnam expansion, where the company aims to capture a strong growing FDI in Vietnam by investing in industrial estate project in Nghệ An, which is the largest province with the highest growth, as well as invest in Dong River project in Hanoi. And all that we have mentioned are the reasons why we can confirm that WHA will continue to be the number one in the industry with the expected market share of 50%.
After we see a growth potential, let's take a look at how the company can make a profit from ROE decomposition, beginning with profitability. Firstly, the revenue projection, which has the main growth driver from a deal with Alibaba. And after that, it will grow by the monetization of assets, upcoming industrial estate project, Dong River project. And for the three businesses, their growth driver will be related to the upcoming industrial estate projects. And all of this will increase the proportion of recurring income in the future. Secondly, WHA also has a fully integrated service, along with a transformation plan to be a tech-based company. Overall, it will boost the margin up to be higher than the peer average at 36.6%, and that will increase the net income growth by 9.6% CAGR. Moreover, due to the competitive advantages, it will make the ROIC to be higher than the WACC, indicating that the investments are profitable. Secondly, for the efficiency, WHA also has the best efficiency among peers for using the asset to generate sales. Thirdly, the leverage. During the decreasing trends of interest rate, it will be a room for the company to roll over debt at a low rate, and that will increase the solvency of the company. For all the reasons, it will result in the highest ROE among peers, and then it will gradually reach more down to the peer average. So, after we know that WHA is a good company, is it a good investment?
Yes, indeed. Because WHA has many businesses, we apply sum the parts DCF valuation and illustrate it in our pyramid. The bottom part is forecasted using top-down regression to arrive at industrial land sale and pre-lease area before being adjusted with our estimated market share. Then, the revenue and capacity of utilities and power will grow accordingly. The incremental rental properties of REITs and property fund are from the asset monetization of the WHA logistics, and at the same time generating recurring income in the form of management fee and dividend income to the WHA group. The bottom-up betas were calculated based on their corresponding peer groups and arrive at different level betas. Two of the discount rates are expected to gradually decrease toward the target DE ratio of 1. The perpetual growth rate of 2.18% is a revenue-weighted long-term GDP growth rate of Thailand and Vietnam. And we arrived at a target price of 4.30 Thai baht, which represents a 25% upside from the current price. Our sensitivity analysis on terminal discount rate and terminal growth rate also confirm our DCF by recommendation. To support DCF, we also did a sum of the part relative valuation and statistical approach to mitigate the fact that the company is lack of direct peers. And both methods have shown higher multiple, implying an even higher share price than DCF. Furthermore, the stock is currently traded at a PE level being lower at 1 SD lower than its 8-year historical level, another strong signal for a buy. To stress analysis, we have done a 70,000 times of Monte Carlo simulation and have seen a 66% chance of a buy.
To complete our analysis, we have to take the risk factors into an account. Today, we focus on 3. Firstly, WHA depends greatly on its biggest portion of the customer, the auto and part industry. However, WHA mitigates this risk by making a long-term contract with the customer and making a shift of its concentration to the S-curve industries from the EEC project. From our analysis, it takes a decrease of 15% in Thailand annual land sale, and we still have a buy recommendation. Next, as the land price and development costs increase over the time, WHA mitigates this risk by passing the cost to the customer and making a continuous land bank purchase. It takes a decrease of gross margin of land sale to be at the level of 40%, and we still have a buy recommendation. Last, as the company has many floating rate debentures, WHA mitigates this risk by entering into an interest rate swap contract. It takes an increase of 120 basis points in pre-tax cost of debt. And again, we still have a buy recommendation. With 5-star corporate governance scoring, along with the management, especially the CEO, Mr. Ripon, the Business Person of the Year 2019, they can ensure you the leading position in the industry. To sum up our combo, crisis into industry growth, number 1 position, margin expansion, beat the market, and overrated risk. We are issuing a strong buy recommendation with the 1-year target price of 4.30 Thai baht per share at 28.2% total stock return. Ladies and gentlemen, although the price had dropped, but remember, every cloud has a silver lining. Thank you, and the floor is now open for Q&A session.
Can you go back to that slide that you just showed of the management team and the what I'm concerned about, the next one I think it is, yeah, that one. So what I'm concerned about is that all the good news is in the price. The fact that she won, CEO of the year, everybody knows about this story. What is new from what you've looked at that should compel us to say now's the time to buy? What do you see different that the market doesn't see?
Thank you for the question. What the market doesn't see that they don't believe in the ECC project, but we believe in the possibility of the ECC project because all the mega trends show the positive side, and Mataput port as well as the high-speed train already got PPP agreement signed, as well as we have knowledgeable laborers to support the EEC project that the industry will come. Also, the possibility of Alibaba deal that already delayed, but in the worst case that they cannot sell the Alibaba, we can monetize it into our REITs when the occupancy rate reaches 90% due to our assumption.
Go back to your cluster strategy. Could you explain that how the cluster strategy could differentiate the WHA from the competitor as well as to enhance the margin and sustainability of the company? How you look at that in terms of the strategy point of view?
Thank you for your question. Actually, the cluster strategy is to combine the customers in the same industry within the same geographical area, and this creates the synergy in that industrial estate. And we see that cluster area can drive the revenue growth of the customers in the cluster area, which is comparing to its main competitors. For example, Amata, they also have cluster area, but for the WHA, the cluster area is more distinguished and located at different locations.
And to add on that, the clustering industrial estate is proved to improve the customer's revenue CAGR by 1.4% each year, according to the Brookings Institution. However, the cost that can reduce and increase the margin over the time is based mainly on that. For example, if the power plant can use together, the utilities business of the company, WHA-UP, can only provide one type of industrial water and share the fixed cost and higher the margin over the time.
What makes you confident the margin on land sales will be maintained or improved given the strong Thai baht and your customers, which are the customers?
Thank you for your question. Firstly, the strong Thai baht, we have also run the sensitivity analysis and shown that even the increase or decrease of 10% of foreign exchange currency, we still have a buy recommendation. And also, even though the price of the Thai baht depreciating, the company has the main project in Vietnam. However, the company recognized that revenue and reinvest the project back and would not have the translation adjustment.
Regarding the increasing land price, the only concern for the company is the cost for industrial estate development cost, which we expect to only increase by 0.6% each year, because it is the construction manufacturing index will be incorporated in our model. Regarding the land price, we think the company can easily pass through the increasing land price in EEC to customer, which means if the cost of land price increase, the company can also increase the selling price to customer.
To add on that, in the logistic properties, they also have the bargaining powers with the customers, which is they can increase the price for 5% for every 3 years. That means the growth of revenues will grow faster than the cost of goods sold, which is used 0.6% consumption manufacturing index, as my colleague said earlier.
So I'm going to ask about Vietnam. It came up quite a few times in your presentation, and you even included in the terminal value when you do the valuations, right? So my question is simple. So the first one is, what is the proportion of the valuation that comes from Vietnam business? The second question is that you did a good job convincing us that the WHA is really competitive in Thailand. So the same applies to Vietnam. Why do you think the WHA, as a Thai company, could be equally competitive in Vietnam?
Thank you for your question. Firstly, in Vietnam, the company has two main businesses, which is the industrial estate development in Nghệ An and the utilities business, which is the surface water in Hanoi. However, it is showing a very strong growth outlook in the utilities business. Is that the price right now in Hanoi, 30% of the total Hanoi population only can access the total clean area of water. And right now, for answer your question, in 2019, the proportion of the revenue from Vietnam is accounted for 9% and 91% in Thailand. In our total valuation model, it takes a portion of 20% of Vietnam based on the Nghệ An industrial development business from our forecasting period.
To add on that, the share price value from Vietnam account for only like 20 to 30%. And we have run sensitivity analysis on removing all of Vietnam project. And what we see is that our recommendation is still applied.
When I looked at one of your slides when you were presenting, it made me ask a question. Is this company really a play on China, like on Chinese investment? And if Chinese investment didn't come as you forecast, how significant is that?
Thank you for your question. We have run the sensitivity analysis on EPS, and we expect that without Chinese or even without trade war, the Chinese people will still come anyway, because as the current trend in China is that rising wages, the pollution concern, and also the competitive environment in China. So we expect Chinese people to come out of their countries anyway, and we expect the 50% increase in land sale, and EPS will decrease for only 5%, and result in the target price being lower by just 14 star. So that is not so significant.
So given the business model of quite in synergy and integrated one, would you think that how risky this company will be terms of the earning going forward, depending on the many risks like the 5G implementation in Thailand, EEC, e-commerce, as well as some China thing, all together, and actually for something like a water shortage in the short term, how you believe that this company could sustain that growth in this kind of an environment?
Thank you for your question. Firstly, to answer your question, the company has implemented to be the digital-based company, and it is shown that in the next 5 years, almost 50% of the total GDP will be based on the digital transformation. And the company already integrated all the digital platform, including 5G and IoT technologies, in its logistics properties and the industrial development business. And to answer your drought problem, the company mitigated this by having around 30% of the total supply as its own reservoir, and also improving its innovation products such as the desalination water and the reclamation water to turn the seawater to the industrial water or the wastewater to use back as the raw water for the power plants and other industrial customers to use.
What is your CapEx assumption?
Thank you for your question. Capital expenditure is forecasted based mainly on the total projects that the company will have. And we have the actual capital expenditure per unit of each business. For example, for the increase of one incremental land in terms of right in the sale of industrial development business, the utilities business will grow by 4 million cubic meter per year. And it is forecasted here that the total of 5 years is around 43 million Thai baht.
Do you assume asset injection for the funding of this capex? Additional sales of asset into the REIT?
Yes, we expect the annual monetization of 148,000 square meters per year.
At what percentage yield?
Sorry?
What is the yield for that?
The yield we assume around 8 to 10%.
8 or 10%?
8% as base case, the base case.
Why is CapEx falling in 23 and 24?
Thank you for your question. The total capital expenditure in 2020 to 2023 are mainly proportion of the Vietnam expansion.
So now all the team have finished their presentation. We are going to finalize the total score received from our panel of judges. In the meantime, please enjoy our coffee break outside, and we will come back and announce the winner at 11 or quarter past 11. Thank you. Honorable judges, ladies and gentlemen, now is the last session for the CFA Research Challenge in Thailand. Final round. First, on behalf of CFA Research Challenge team, I would like to congratulate all participating team for your hard work over the past 5 months. 5 months is definitely a long period to be in a competition. Staying focused, managing between study, work, and research challenge is not an easy task. There were teams who gave up before. However, this year, we are impressed that most of the team have completed the research and submit us with a quality report. We really do hope that this challenge is a learning and maybe self-discovering experience for all of you. Before we announce the winner, I would like to invite Kun Andrew to present the award. So next, it is the time that all the team is waiting. So first I will announce 2 teams of the second runner-up. So the second runner-ups goes to Team A and Team B, Sassin Graduate Institute of Business Administration and Chulalongkorn Universities. Team A and Team B, please go on the stage to receive the award. So now it is the time that we will announce the winning team. I will announce the winning team first, so the other team will be the first runner-up of the event. And the winning team of CFA Research Challenge the year 2019 to 2020 goes to Team C, So the first runner-up will go to Team D, Assumption University. Team D, can you please come up to the stage to receive the award? Congratulations, Assumption University. And lastly, please give a round of applause to our winning team this year, Thammasat University. Team C, please remain on the stage. May I invite Team A, B, and D to go up on the stage to take the group picture.
apologize, guys, last minute change. Alright, so last but not least, on behalf of CFA Society Thailand, on behalf of CFA Society Thailand, we would like to thank our judge for sharing useful feedback with our contestants and also giving them the challenging questions. So we have a gift for you guys as our appreciation. So everyone, please join me in welcoming our judge and our chair of research challenge, Khun Pasawut Vilainidan, onto the stage. Please. Please remain for the group photos. Alright guys, so we're just gonna call you guys like one group at a time. Okay, so the winning team, please come on the stage. First runner up. Come on up. Okay, second runner up.
I'll be in front. Congratulations to everyone. So to keep updated with all our future events, please follow us on CFA Society Thailand right here, and also CFA Institute Research Challenge Facebook page. We also have this streaming on Facebook, so if you guys want to go back and rewatch it again, you can do that. And if any one of you guys post any pictures for this event on any social media, please don't forget hashtag CFA Research Challenge for us. Now we have come to the end of our program, so thank you all for coming. And congratulations everyone, and we hope that you all enjoy our Research Challenge final round today. Hope to see you all again next year. Thank you. Have a good day, guys.